Hey guys, it's Crossroads here. Today I wanted to talk to you about PayPal and Google, specifically why they're going down so much. Now, you may have missed this headline, but it's all on tariffs. But looking at Google, looking at PayPal, typically these stocks tend to be a little bit less volatile than a lot of the peers in the US market. Both were down about 5% today, which is unusual, even though it was quite the drawdown, actually. If you look at the NASDAQ, over the last day and a half or so, we had about a 5% downturn, which is half a correction. That doesn't happen every week. And there's a reason why specifically Google and PayPal really did get hit hard today. Let's take a look first at the stocks here. So here is PayPal. You can see it's down 5.39%. Google, of course, has Google or Goog, but either way you look at it, it's down 4.88%. Very unusual, and it's really coming from one place. This is a Reuters article entitled Berlin on Measures Against U.S. Tech Giants. Nothing is off the table. And specifically, there's a lot of talk about tariffs, but earlier in the morning, there is a lawmaker from the EU that specifically called out these two. So specifically here, he had said in the case of digital service providers, there's also a huge economic interest on the part of U.S. companies. In this respect, you can also look at charging fees on PayPal or Google. What exactly does that mean? We're not really sure what it means. That's a tough thing. Basically, the market looked at this and said, you know what, let's shoot and ask questions later. And so people that were in the stock saw the headline like, okay, did not see Google and did not see PayPal as much of a risk as far as it comes to tariffs. You think of those typically on physical products. You can also think of them, as far as like software as a service type of stuff. But in both respects, it seemed like Google and especially PayPal were pretty safe. PayPal, after all, is mostly about peer-to-peer payments, payment service processing, and that sort of thing as well. So for them to be called out specifically, that's kind of interesting. And the wording of this specifically is charging fees on Google and on PayPal. I'm not sure how that would work. PayPal is in the EU quite a bit, especially in Germany, and it is used very heavily there by the consumers. And I'm not sure if this means that on top of any service fee that PayPal charges, that there's going to be an additional service fee just because they're PayPal. If so, that is A, really unfair, and B, it's going to be really rough for PayPal as a company. Just because people don't like paying fees. And it just depends on what this is, but if you double the fees just because it's some silly tax, that's tough. Could it be a fee leveled at the actual companies for Google and PayPal where they're like, okay, because we don't like what your government's doing with tariffs, we're going to hit you with a 1 billion fee. They could do that. Just like for the price of doing business. Now, the odds of this happening are very, very low. I think for a few reasons. For one, I think that there will be some measure of negotiation and hopeful by that April 2nd deadline, so that hopefully President Trump, the United States, can come to terms with the EU, with Canada, with Mexico, and so forth. But even beyond that, it seems like retaliatory tariffs would be something like, okay, if you're charging 25% on vehicles, we're going to do the same from vehicles from the United States and that sort of thing, rather than specifically hitting Google and PayPal directly. Now, what made this even more funny is if you look at other companies that are similar to Google and that are similar also to PayPal, you can see that they weren't hit nearly as much. So case in point is Visa. Visa is not in Europe as much. They are making excellent headroads. One of those was, of course, Visa. Visa is not in the EU quite as much. They're making excellent inroads on a couple of products, but they're a small player compared to PayPal. Visa wasn't mentioned. They easily could have been mentioned. They're actually much more of a U.S. firm than PayPal, and yet they are down only 2%. MasterCard is another one. MasterCard is also making inroads in their EU, but they're still a relatively small player. They're down 3% versus where PayPal and Google went. Now, what about a Google competitor? Even though Microsoft and Google do not do the same thing, Microsoft does have Bing. Microsoft does have, of course, the data centers. And you can see here today, Microsoft is down a lot less than Google as well. So this did seem like it was very headline specific with that call out of PayPal, with that call out of Google. The market is not efficient. The market is not always irrational. And it just looked at PayPal and Google and said, oh, these tariffs, retaliatory measures are going to specifically hit PayPal and Google. Let's sell these off as hard as we can. Now, of course, everything was pretty red today for the most part. So it shouldn't be a surprise that these fell. But I would have expected maybe 2% today, possibly 3% in both of these names. Both are actually looking relatively cheap. I'm not super bullish on Google, but it is attractive as far as valuation and what they're building as well. PayPal, I've talked about this quite a bit. It feels like the worst case downside, honestly, is opportunity cost. You look at the multiples, they're increasingly cheap. You look at the buybacks. If PayPal, and hopefully this is not the case, but if PayPal sits here for 3 years, they're going to end up buying back a third of the stock in 3 years as they improve free cash flow, as they improve revenue, as they improve margins, as they improve transaction margin dollars. And that's without baking anything in from the new innovation. And that's without banking on anything from the new innovations that they're cooking up, which really should start hitting in the second part of this year as far as some revenue, and then next year certainly as well. So it's just kind of one of those things where sometimes the market is irrational. Now, keep in mind, there's an often quoted saying that says that the market can be irrational longer than you can be solvent. So I don't suggest taking any crazy risks here. I mean, you do you. It's your money. They call it personal investing for that reason. But I wouldn't bet the farm necessarily on either of these, because we could still see a lot of pain and a lot further downside, despite this being a silly sell-off. Even if you see like a headline where everything is resolved by April 2nd, I still wouldn't expect to see PayPal and Google just outperform everything in the market. They tend to be a little bit more stable, a little bit less volatile as well. Now, over the long term, I think both of these companies will do quite well, but over the short term, anything can happen. So for myself, yes, I'm basically out of cash. I've got a little bit more that I can buy. I'm very happy to buy PayPal here. Google, if it was the only thing that had fallen out of everything in the market, I'd probably have a Google position, even though I'm fairly neutral on that. I'm bullish on some parts and bearish on others. But it's an interesting time as we have more and more uncertainty in the markets. Markets don't love uncertainty. And really, until this gets resolved, and it may not be fully resolved by April 2nd, there could still be a lot of pain, even though we've seen a lot of pain. Let me show you one last thing, too, in the broader market. This is the NASDAQ. Of course, the NASDAQ is a bit more volatile than S&P 500. But we can see here, as far as the drawdown, if we go to the peak, which is right here, we are at a 13% correction. Now, in terms of the market, 13% is officially a correction. It's actually at 10%. Once we actually see 20%, if that actually happens, technically speaking, we're no longer in a bull market for the NASDAQ. And I don't know that we'll get that far. Even just recently, you can see 5% downturn. That's half a correction from the 25th through the 28th. That doesn't happen too many times unless there's major news. There's a lot of fear in the market right now. There's a lot of uncertainty. A lot of it is from the presidential policy as it relates to tariffs, the retaliatory measures. People just don't know. And so the market is very much in the mood to shoot first and ask questions later, as was the case for the victims today of PayPal and also of Google. Now, if you're not holding any of these, don't be too smug, because there could always be a headline tomorrow, even if it has nothing to do with your company, that tariffs will impact some company out there that you hold in your portfolio. These are hard times for all of us. Let me know what you think in the comments. Did you think that the market got it absolutely right with Google and PayPal? Do you think that there's a high probability of these actually sticking? And in which case, do you think it'll be the fee form, a flat percentage, or how do you think that that would look? Because it's relatively unprecedented. But I'd love to hear it. I could be wrong. I've been wrong many a time before, and this may not be the first time. We'll just have to see. Time will tell, and hopefully we'll get some resolution one way or another, just so the market can at least bottom at some point with some certainty as far as what the near future looks like. Anyway, thank you for watching, commenting, and subscribing. Until next time, happy investing.